This is the Daily Market Comment for Wednesday, June 21st by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us at xm.com. The US dollar gained ground against most of the other major currencies on Tuesday, losing only against the Japanese yen. Although the moves were somewhat reversed during the Asian session today, yesterday's action suggests a risk-off trading activity ahead of Fed Chair Powell's appearance before the U.S. House of Representatives Financial Affairs Committee for his semi-annual testimony on monetary policy. Currently, investors are almost certain that a 25 basis points hike may be on the cards by November, but they remain unconvinced on whether another one could materialize before the end credits of this tightening campaign roll. Today and tomorrow, Chair Powell will have another opportunity to convince investors about the Fed's intentions. But with several data sets pointing to easing price pressures and softening wage growth, it may be hard for the Fed chief to find convincing arguments. If Powell stresses the need for keeping rates higher for longer because there is still a long way to go to bring inflation to 2%, the dollar could gain a bit more. That said, calling for a bullish reversal still seems premature. On the other side of the spectrum is the Bank of England, which, following today's higher-than-expected CPI numbers for May, is under pressure to turn more aggressive. With the core CPI rate rising to 7.1% year-on-year, the probability of a 50 basis points hike on Thursday now stands at 40%. As for the future, investors are penciling in 160 basis points worth of additional rate increases, up from 140 yesterday. The pound could gain and extend its uptrend only if Bailey & Co. rise to the occasion and meet investors' expectations, or better say, demands. All three of Wall Street's main indices traded in the red yesterday, with investors perhaps locking some profits after a modest rate cut by China did little to boost their sentiment, but also due to reducing their risk exposure ahead of Fed Chair Powell's testimony. Equities could extend their retreat should Powell convince the market that a couple of more hikes are looming and that rate cuts are unlikely to begin as early as it is currently priced in. With the Nasdaq around 47% up from its October lows, a decent setback may be a more than normal counterweight within the broader uptrend, which could very well resume if market participants maintain bets about a series of rate cuts next year. This was a Daily Market Comment here at xm.com.